Another active market in Nigeria in recent days has been the fixed income market. The DMO has been really busy. We've seen the second quarter calendar, federal government bonds plan to borrow. We see it's less than what they did in the first quarter. And we've talked about, well, what other alternative do they have? If they're borrowing less and oil prices are reducing, meaning that revenue is coming down, where is the federal government planning to go to? And also, what's happening to yields? That could be another attraction to get investors into the market. But let's talk to Ayomide Odesonya. He's a fixed income dealer with FSDH. Hi, Ayomide. Good afternoon and welcome to the program.
Yeah, hello. Good afternoon.
So we've seen the calendar for the second quarter, and it's less borrowing than anticipated, at least compared to the first quarter. What do you think is behind this? I mean, because revenue from oil is reducing, and now we see government reducing its borrowing based on the bonds calendar. Do we know where else or why this is being the path for now?
I think just as we saw in the first quarter, the DMO still oversold. So they sold more than the amount that they had on offer. For the NTB auction that was on Wednesday, they actually oversold by about 314 billion. So we had about 400 billion on offer, but they sold about 714 billion, right? So I think the major reason why they're just putting that out there, it's a way of controlling markets. So we saw how, at the last bond auction, so that was the one in March, there were non-compete bids, and so they actually undersold to the market, right? And even at the NTB auction before the last, they undersold as well, and this pushed yields lower. So I'm guessing, the DMO is just trying to send a message to market that they're not, they're not very desperate, right? And so that's sort of keeping yields suppressed. But looking at what is going on on the global scene, oil price, the budget was actually, the budget was stated with oil price being pegged around 75, and we've seen that decline in recent times to even 60, 65 per barrel, right? So that definitely shows that they should be borrowing even much more because the deficits will grow larger. But I think that's what we would see how that plays out in the bond auction on Monday. So we have about 350 billion on offer. I expect the DMO to oversell as well. And I actually expect subscription to be quite high on those because we've seen demand even in the secondary market for those papers.
Yeah, well, I hear you there say that perhaps the DMO doesn't want us to know they're desperate, but we know that the government is desperate for funds at this time because, oil prices are down, our production is even down in volume, and now we see this. But do you see them going to other markets, maybe to raise? I know it's the CBN more when you talk about OMO, talk about NTB. Do you see them looking at other quarters for this funding?
Okay, yes, one of the things that they did was, the domestic bond, so the domestic, the Euro bond, right? And that was in USD. I know that they've also mentioned that there might be a Sukuk auction, and seeing as, a lot of individuals in Nigeria who are restricted to that Sukuk auction, that's definitely a way that they'll be able to borrow large sums. And I believe that they would, try to also borrow those at lower yields. The last Sukuk, which is the 2033's one, is trading around 14% levels in markets, even though other securities of the same tenor are trading around 19, 20%. So, I'm sure, the DMO would try to sell a lot at the Sukuk auction and raise money from there. So I'm guessing they're looking at things like, the Sukuk auction, and then maybe they're looking to also borrow. They might be looking to do another domestic Euro bond.
Interesting, especially with the Sukuk. I think there's more confidence around that Sukuk because it's tied to project, and people can actually see the project, the level of use of the fund, and all of that. But Don't you think at at a point in time in this second quarter, the yields could go up? I mean, if they're looking at all of this, consumers do not have any power to push the yields up one way or the other.
Yes, with what we see, especially with the inflation figure, we saw inflation climb up slightly at the last inflation figure printed. We can also see what's going on globally as well. So, with the tariffs, we can see what's also happening with the Feds, not being as willing to cut because of everything, the pressure on the market, right? There's going to be an MPC meeting in May. I expect that at the MPC meeting, markets believes that they would most likely hold, because initially we felt they were going to cut, but with what is happening with inflation and even globally, we feel that they might just hold, right? If nothing is done to the asymmetrical corridor, which they held the last time, if they do the same, cost of fund is really high. I do see market becoming more bearish and rates climbing up, regardless of what the DMO does at auction. I believe that the secondary market would actually try to push rates higher.
All right, Ayomide Odesanya, fixed income dealer with FSDH. Thank you so much for your time.
Thank you.